Okay, folks, welcome to this week's Fife Property weekly update. This is all the properties I've actually listed in the last week with all the estate agents, Fife, according to Rightmove, from the 7th to the 13th of July versus all the properties actually sold. Now, I was a wee bit later than usual, and the reason I'm a wee bit later than usual is because I noticed a pattern or a trend here, and I wanted to show it to you so you'd understand exactly where the market is right now. And possibly what is going on, the dynamic and the mix of the market. We'll first of all look at the micro regions and how they intertwine with each other and where the demand is in each micro region. If they're selling quite well, they're not selling quite well, and then we'll drill it into the price points as well. So I'll take the whole of Fife and I'll break them down into 0 to 100,000, 100,000 to 150,000, 150 to 200,000, 200 to 250, 250 to 300, 300 to 400, 400 to 500, 500 to 600, and 600,000 plus. This is a great insight into what's actually going on. And it actually backs up, and there's a very strong correlation in what I'm about to say when I go through this. So you'll understand exactly where the market is right now and what you need to do potentially as a seller. So if you've got a higher price point, or if you've got a lower price point in a property, and you're looking to put your house on the market right now, this is going to give a great insight into where the market is and how you should be positioning your pricing strategy in order to attract the right audience. Because we actually did a show yesterday on this as well. It's selling for the first time, but I actually covered this for a lot of people. So it is on this link. If you click on the link above or below here and you click through and you'll go down the list and you actually see the show that Richard and I, actually Andrea and I did yesterday, called Selling for the First Time. It's our guide to getting it right and avoiding the beginner's mistakes. But I actually went in depth and in detail in terms of where the market is, in terms of pricing strategy, and kind of went off piste a wee bit in terms of selling for the first time. I actually dived into what you should be doing as a seller and how you should be pricing your strategy. And if you're on the market right now, how you should be pricing your strategy in order to get someone interested in your property again. Because more than likely, if you're, I'll make a good judgment here. More than likely, if you're at a higher price point, you might be waiting for viewers at this point in time. Could I be right in that assumption? There's a strong possibility, and I'll show you why. Okay, so let's dive into the normal statistics, the weekly statistics overall. Let's have a look here. As we can see right across the Fife property market, if you look in the Cooper area region, you've got 7 properties coming on with all the estate agents in the Cooper area, KY14, KY15, and actually in the same area in the same week, 8 properties were actually sold. So now, at this point in time, it actually looks like Cooper's doing quite well in terms of supply and demand. So demand is outstripping supply because there's 8 properties sold. There's only 7 actually listed. But I'll tell you, the next slide will actually reinforce what's going on here. East Neuk 9 versus 7, St Andrews 9 listed, and only 1 sold with estate agents in the St Andrews area. St Andrews is a very high price point, and the next slide will show you what's going on here. Leadmouth 14 versus 7, Dunfermline 40 versus 65. So Dunfermline's still doing quite well. I think it's a lot to do with the fact it's proximity to Edinburgh and it's a far better price point and it's easier access for commuting in. However, if anybody's listening from the Edinburgh area, you need to consider the Leadmouth area because we've now got a direct train going straight into Waverley Station from Leven. And it's a fantastic price point, and if you take it into consideration, and if you compare it to the Edinburgh area. Now, Edinburgh, yeah, you've got town centre, you've got location, you've got the city and all the rest of it, and you've got the lifestyle that goes with that. But, beaches, coastal paths, quietness, relaxation, probably better schools, I would say. Well, I'm probably biased, am I not? Anyway, so let's talk about that. So Kirkcaldy 24 versus 22. So overall, 115 listed, 123 actually sold in the same. So on the face of it, it looks like, yep, transactional numbers are going very well. The estate agency market's going very well. And that's a good thing, by the way, definitely. But the next slide explains quite a lot here. Let me just drill in on this and tell you what's going on here. This is the same data, the 115 versus 123, but broken into price points. Now you see in the number of properties actually instructed, there was 22 properties out of that total 115 actually up to 100,000. There's 26 up to 150 from 100, There's 14 from 150 to 200,000. There's 13 from 200 to 250. And then you see it going down, and then it goes back up when it goes to 300,000 and 3 to 400,000, 17, and then 8, and then 4 and 6. So when you look at the 300,000 upwards, that takes into account 30% of that number. So 30% of these properties actually listed last week were at over 300,000. Now look at the profile of what's getting bought. Up to 100,000, there's 30, 26, 18, 18, 16, 11, 1, 1, 2. Up, what's getting bought above 300,000 is only 12% of the stock. So 12%. So 30% is getting listed above 300,000 of these properties in the week, but only 12% is getting bought at 300,000 or above. This comes right back to my analytics, which I've always thought, and this kind of backs it up, and we'll look at it on a monthly basis in the next week or two as well, and we'll extrapolate from there. But this actually goes into my point about the fact that, yes, there's a lot of properties going on, and yes, it looks like overall what's actually getting listed in total numbers, what's getting sold in total numbers is an equilibrium. But what you find is the mix between what's getting listed and what's getting sold is entirely different. And you could see back there when I take that up, 30% of these properties that are actually getting listed are over 300,000. Only 12% of them are actually getting bought. So significantly less properties are actually getting bought at 300,000 and above, which tells us the buyers in that market, when you go up to 300,000 and above, actually are not, there's not enough buyers in that market. So if you're £300,000 and above, you need to think about an adequate strategy in order to attract the right person or the right buyer, which are few and far between at this point in time because of mortgage affordability. Yeah, you might get a cash buyer. You might get somebody that's in a position to proceed, but we're not at the boom times anymore. Just take that for granted. And you probably know that anyway. You can see a lot of boards maybe taking a wee bit longer to sell and stuff like that. So that's what you have to take into account when you plan. When you plan for what you're going to do next and how you're going to do it, please do not take it for granted that your house will sell itself, because it probably won't. And lockdown and boom times after lockdown as well, yep, my cat could have sold your house. Literally, you could have just put it on a photograph on social media and probably somebody would have bought it. What price they bought it for would be a different dynamic completely, because basically that's down to the negotiation of an estate agent. And if your cat's negotiating for you, there's no much chance of doing anything. So that's just to give you an example of what could have happened, what would have happened before. But what's happening now is you have to make sure you price accordingly when you're at £300,000 and above. I would argue as well, it possibly, well, no, 300,000 and above is probably where the numbers are when you go back to there, because you're getting up to 250,000 in here. From 250 to 300, you've only got 5 coming on, but you've actually still got 16 getting sold in the same week. So there's a huge amount. So what's getting actually listed, 70% of them are under 300,000, but 88% of them under 300,000 are getting bought. So everything under 300,000 and under is actually doing extremely well. Everything over 300,000 will take a bit more time. So just bear in mind. When we go back to the St Andrews one, 9 versus 1. 9 properties coming in St Andrews, 1. That's KY16, by the way, not just predominantly St Andrews, but that's Balmollow, that's Garbridge, that's Lookers, surrounding areas. It takes into KY16. And there's only 1 actually getting sold in the week. So that tells you straight away that St Andrews area is quite price sensitive at this point in time. Now, there's a lot of implications there, because what's happening is, yes, there's properties getting bought in St Andrews, but the new house builders, the new builds like David Wilson Homes, are actually offering free stamp duty. So they're paying people stamp duty on £600,000 property, or 300 or 400,000 pound property. So they're no need to pay the stamp duty on that at all. They're paying it for them as an incentive. They're also giving them low deposits. So if somebody's got minimal deposit and minimal money to spend, and they can get a brand new built for them with a minimal amount of entry into that property, who do you think they're going to pick first, more than likely? Possibly David Wilson Homes, or possibly another house builder as well that's there. So these are the incentives that are actually stifling the St Andrews market right now. Now, that might take a time to work its way through, just like you come into a motorway and you're all the next minute you're in a 3 mile long traffic jam. And then when you get to the end of it, you kind of think, what was holding everybody up? And that's kind of where we are right now in the St Andrews market. East Neuk a wee bit is suffering a wee bit, primarily because of the attack on the second homeowners who are now exiting the market, putting the properties on, and as a result, there's a wee bit more stock in the East Neuk area, and then there's less buyers overall because the second homeowners and the serviced accommodation people are very, very nervous about the incoming government. It's just come in just now about their draconian attitude towards second homeowners and also to serviced accommodation. So that's why the buyers are holding back as well, because they're seeing where the lie lands. So you've got less buyers for these types of homes, but you've got more sellers actually looking to get out of that market now because of the draconian attitude between the policies that have actually been set before by the Scottish Government. So these are the things to watch out for if you're buying or if you're selling in any area across Fife, and to take these facts into account. And it will then allow you to plan properly. Now, what I'm saying is, just don't give up. That's not the point. It's just make sure you understand where things are, so you don't cause yourself too much stress, so you don't put yourself under too much pressure by possibly making an offer on another house and then literally giving you 5-6 weeks to sell yours. And then leaving you no choice. You can't get that house unless you sell yours, and then it not going according to plan. This is why I talk to a lot of people when I sit down with them and sit and say, manage your sale, learn to do that. And what I mean by that, managing a sale, is you put your house on the market first. Yes, you've got nowhere to go, but no, you will never be homeless, because it's you that agrees when somebody comes along and presents you with an entry date, whether you want to accept that entry date or not. You can just say, I'll wait for the next person if the entry date doesn't suit you. And this is how you can get longer entry dates. You get more flexible entry dates. So then when you get a commitment from them to buy your property and give you a more flexible entry date, and that works for you, then it allows you then to give some certainty and then be able to go and find your dream home from there. Because the house is coming on all the time. It will probably suit you at this point in time, because this is when a lot of properties come onto the market in the spring, and definitely in the summertime. So this is when it happens. A lot more stock comes onto the market, so you have a lot more choice. So learn to manage the sale. There's also a case that now all this 180 billion, it was in household budget since lockdown because of COVID and all the money it was pumped in, that has now disappeared completely. Therefore, people just don't have wads of cash now to put on house prices. So mortgage rates have gone up, and since 2021 by 60% month on, for the month, compared to 2021's affordability. And that's 2/3 of the issue here. And house prices have gone up as well. And that accounts for the other third of the issue about what's happening in the market and why buyers are a bit thin on the ground for that reason. The mortgage costs are a lot more, so therefore they can only afford a lower value property than something they could have afforded a bit more and higher value in 2021. But because interest rates and base rates have gone up as a result of that. So hopefully, what we're going to see is we might see a 1/4 point adjustment in August from the Bank of England downwards, and therefore you might see some of the mortgage companies, which are actually jostling for a position right now, and bringing their mortgage rates down ever so slightly to take into account, and that might give people a bit more confidence to come back into the buying market and actually start buying property again. Now, it's not doom and gloom, trust me. It's nothing like that at all. It's just a repricing strategy. That's all. Nothing that serious. Transactional numbers are fine. That indicates straight away when you've got good transactional numbers every single month. In other words, the number of properties being listed, the number of properties being sold are about the same. When you've got good transactional numbers, that means the housing market is extremely healthy. Prices have nothing to do with it, the health of the housing market at all. Prices only take into account the health of the mortgage market, because if prices are down, therefore people have still got mortgages. Therefore, what happened in the credit crunch was the negative equity position and put banks under pressure. That's all it was doing. So prices are not down year on year. They're still exactly the same. In Scotland, it's just gone up ever so slightly. So that still indicates to me that that market and the pricing strategy and everything like that is still fine at this point in time. You just have to take the right advice of your estate agent and listen. I talked about that yesterday, actually, in the selling for the first time. Listen to your estate agent and take on board what they're about to do and take their advice more than likely, if you know it's the right advice, because you probably know it's the right advice, you just don't want to hear it. So take the right advice, move forward with it, and that will get you to the next steps and what you want to do. This is all about helping you manage life as it happens, not just reacting to everything that goes on, but actually making sure you've got the proper strategy to move forward, and actually then purchase your next house. After all, if you're expecting 10% more for your house, for example, then you'll be expected to pay 10% more for the other house as well. You can't have it both ways. So if you're going to accept an offer which is round about the home report value, then possibly the house that you're going to be buying is probably going to accept an offer round about the home report value as well. So it's just like for like. That's all owning a house does. It allows you to trade like for like on the housing market in terms of the price appreciation or depreciation, depending on where the market is at that point in time. It only allows you to take out that and hedge where you are right now. If you understand what hedging is all about, it's actually making sure you're protected against any swings in prices, because you maybe don't own a house. Therefore, if prices go up dramatically, therefore it's even more difficult for you to get on the property ladder. That's what that's all about, owning a house. It's also a clever way for the bank to get a mortgage. That's what home ownership's all about. It's the banks that have actually sold us that idea. Anyway, let's talk about the numbers then. So we've talked about that. Let's talk about what's actually sold. Let's talk about what we've got coming to market soon as well, and another couple of things as well. What was actually sold last week for us? We had one in Newborough. It took a month. It was offers over 145,000. It took 1 month to go, and it was a 3-bedroom semi-detached house, and someone relocating to the area. So from outside of Newborough, relocating into Newborough, and perfect property for them, sold in a month. No surprise, because it's 145,000, so it went quite well. The next one, King David Street, St Monans, took just over a month, 5 weeks, 3-bedroom upper apartment, first-time buyer. We love first-time buyers, lifeblood of the market, by the way. Offers over 135,000, that was. So that went in 5 weeks. St Andrews Road, Largo Ward, I took a bit longer. That was offers over 425,000, and it took round about the 9 months mark. Now, it was interested before, but it was just the fact that getting other people over the line in order to buy this one, but it was still on the market for that reason, and now it has finally been sold. So these people actually worked into that pricing strategy in the first place. They understood where the market was right now. They took on board the advice, and it's paid off for them as a result. It's probably more than likely been a stress-free sale, because they knew this might have been a strong possibility because of the price point, because of the buyers at this point in time, because of mortgage affordability, and because house prices were a bit higher than usual. That's why you listen to your estate agent. But it's away now. It's done. The job is done. So that's clearly what you should be doing, and talking about that with your existing estate agent, or with the estate agent you get out. So what's coming soon? Watch out, actually. I did it on Friday. I squeezed it in. Queen Margaret Street in St Monans, 2 bedrooms. Actually, no, it was a 4-bedroom semi-detached property in Queen Margaret Street and St Monans. So this is a really good one. It's coming onto the market soon. The pre-portal has been done, so you can see that in the listings on our Facebook page. So it's on our Facebook page right now. If you go on there, it's a 4-bedroom semi-detached house. It is a cracker. It's your opportunity to put an own stamp on it, and it's going to be starting offers over 180,000. We know that because we've got the home report already. So, but your first port of call is the social media. You've got a golden opportunity to jump in there before anyone else. If you're in a position to proceed, make sell an offer they can't refuse. It could be yours before we go on the website. We also have a 4-bedroom townhouse coming on 4th Street in St Monans, just down near the harbour. If you know 4th Street at all, it's a cracker, and it's got amazing views at the top of the window and the bay windows. So that's going to be a really good one for someone. A 4-bedroom townhouse coming on soon as well. I'll be doing a pre-portal this week. What's actually been sold now? Let me talk to you about what's been sold. Actually, I'll quickly just give you a summary of the Zoopla UK Price Index, before I talk about what's been completed and over the line, because it gives you a good idea about where prices are and what you should be paying over the home report value, or under, or at the home report value. if you're a buyer, definitely. So the Zoopla House Price Index came out for June, and the executive summary went over, and Zoopla basically said that house prices are unchanged over the last 12 months. They're a great collector of data. They actually have good real-time information as well, whereas the home reports are based on historical information on the land registry. So if you combine the information from the land registry, which is historical information just sold, it might have taken 6 to 9 months to get on the register, with Zoopla's information as well, which is real-time accurate information, then it gives you a real good hypothesis and also a possibility of extrapolation in order to see where the housing market is going in the next 3, 6 and 12 months. So Zoopla is a real good source for that, and I did a show during the week. If you want to see that podcast or that show, just click on the link above, scroll down and click on there, and you can listen to the podcast or you can watch the show. But mainly the headlines are from Zoopla: as prices rise across all areas of the last quarter, annual rate of price inflation remains negative in the London area and surrounding down in the south of England, but it is rising elsewhere, but not double digits, just 1 or 2%. Northern Ireland actually is up 3.3%, but that's the highest year on year so far. And so Scotland's around about 1.8, I think. Home buyers and so this is the key here. Home buyers and sellers are largely undeterred by the election campaign. That's one of the good things. Demand 6% and sales agreed 8%, both higher than last year. But demand is higher because the mortgages are settled out a bit more and they're still a bit more affordable by 6%, but it's because there's more stock coming into the market than there was last year, hence the reason why sales agreed are up 8%. But if you look at and divide it by one of it's statistics. That's the way it works. So the government does it. The kind of smoke and mirrors things. But ideally, what it's telling us is there's a lot more stock than last year come on here. Hence the reason why there's a lot more sales than last year come on. But there's a lot more stability because the general election's now over and all the rest of it, and people are more a bit undeterred now about going forward with buying, but in the lower price brackets. That's the key here. Zoopla are going to say that 75% of the 1.1 million sales projected for this year are actually either complete or in the sales pipeline. So there's 1.1 million sales that will be on this year over the whole of the UK, but on Zoopla's website. But they've actually got all the information about what the ones that are currently completed and sold just now. So they're able to extrapolate that towards the end of the year and say 75% of all the 1.1 million will actually be sold by the end of the year. So 25% of that stock will move on and sit on the market till next year or be completed next year as well as it goes through. So there's a lag now. There's a lot longer lag. In other words, there's a lot longer time for selling in the market right now because of this. And then Zoopla say the calculated house prices are currently 8% overvalued. So Zoopla actually say that house prices are 8% overvalued. Now, that doesn't necessarily mean to apply to Scotland because we've got home reports here, but they're bringing in England into there as well, which don't rely on home reports, and it's really just left an estate agent to pluck a figure out of the air and put a number on it. So that's why in England you usually typically take the estate agent's figure and pay under it. In Scotland, you usually take the home report figure and possibly think about, would you pay a bit more for it? Because one starts at one end, one starts at the other end. There's the English market starts at the price there and gets in the middle, and there's the Scottish market starts there and hopefully it appears at the same price. So one goes up, one comes down. Glass half empty, glass half full, I suppose. And they say by the end of 2024, all prices on their website they think will be fairly valued. So you'll be expecting to pay what's actually on the home report and what's on the website itself. House prices, according to Zoopla, is on track to be 1.5% higher over the 2024 period. Again, if you want to tune into that or listen to that podcast, please feel free to do that. I'll just come back to quickly what's completed with us. Completed, in other words, keys handed over. Oh, that's the good sound. That was the East Neuk Responders, first responders key ring I got from when I was out at the Ely Fair Day yesterday. So Laburnum Road in Methil was a 3-bedroom semi-detached bungalow. It actually sold in 2 weeks when it came on the market for 16% over the home report value. It represented another £16,230 to the seller. Do you think they were delighted? Absolutely. And it all worked. It was a win-win situation for both parties, I would say. So that's definitely one I would be looking out for at this point in time. And again, as I said, if you're thinking about selling, you need to speak to us pretty quick. Okay, so let's talk about tomorrow, Wealth Creation Show. Rich and I do Wealth Creation Show every single week at 12:30. We were doing it at 9:30 a couple of times because I was unavailable at 12:30. We'll do it tomorrow live at 12:30 tomorrow, and it's Wealth Creation Show is about disruptive changes for wealth and success. Now, disruptive changes actually refer to innovations that significantly alter or replace existing methods, products, or markets. Disruptors, starting doing video. Nobody did video before. And then that disrupts the market. These changes often start in niche markets, but eventually transform entire industries. The key is to understand what disruptive changes are and the strategies to leverage these disruptions for personal and professional growth. So we're going to talk about that tomorrow. If you'd like to learn more about how to leverage disruptive changes and how it can be harnessed to create wealth and achieve success, then please feel free. There's no need to head back to school on this. I've done it over the years as a landlord, as an investor, over the last 30 years. It's basically the Wealth Creation Show is more or less a lot of my information, a lot of my guidance that I've actually learned and wisdom I've learned over the years. I just impart into the Wealth Creation Show, and we think about the subjects that people and investors would want to know at this point in time, based on the feedback that we're getting from people. And we feel that disruptive changes for wealth and success is probably one to talk about right now. So tune in tomorrow. 12:30. If you want to see all the back episodes, I think we're at 131 episodes. So if you want to see 130 and back, then by all means do that. If you want to see my journey, my story, then you're probably looking at episode 45 for the next 10 episodes. How I made $1 million, how I lost $1 million for the next 10 episodes. And that'll teach you a lot. Success leaves clues. And it definitely left it for me, I suppose. And it will give you a real good insight into how to make $1 million, how to lose $1 million, and success leaves clues, as I said. You can learn a lot by somebody's failure as well, by the way. And I don't leave, and warts, all weird, warts and all. I'm quite open about that, about where it all came from, how my success came about, and also how my failures happened as well. So that's in the Wealth Creation Show, probably episode 45 and upwards, on this link. Just click on the link, drill in the Wealth Creation Shows, go back to episode 45, thereabouts. It's all mentioned like that, and you'll get more insight into that. And there's a lot of information about there. So if you've got any challenge about anything at all, whether it's you're struggling in business, you're maybe struggling at you're maybe even struggling at your work, you're maybe struggling in your job. There's something in there, by the way, on the Wealth Creation Show, because I talk about that as well, because I've been exactly the same person. I worked at the same time as built a portfolio and did it all myself. So I talk about that quite a lot, of how to do that, how to manage that, and how to develop that, and how to get the right skills in order to understand that. Remember, you don't know what you don't know, and maybe somebody else knows that answer that you don't know. So that's why you watch things like the Wealth Creation Show. Okay, until next time, guys, I'm Jim Parker, and I'll see you tomorrow for the Wealth Creation Show at 12:30. Bye-bye for now.